Hello, this is Merrill, a tax tutor. I'm a CPA and I've been helping business owners save money on taxes for over 20 years. I've helped clients save anywhere from $10,000 a year to over $1 million a year in taxes. You can say my purpose in life is to help business owners save money on taxes. I have a question for you. Would it be worth saving $1,500 in taxes today just to pay $13,000 in taxes later in life? Maybe it could be, but perhaps not. I know I don't want to turn small tax savings today into a big tax headache tomorrow. But unfortunately, that happens all the time when people put money in a traditional IRA or a traditional 401k. You see, what happens is tax advisors tell people to invest in traditional accounts because it will save them money on taxes right now, and it makes that tax advisor look really good. If they can say, put $10,000 in this account and it will save you $3,000, then they'll say, look, I just saved you $3,000. They look good, and you feel good because you just saved money on taxes. However, when you or when that client retires and starts pulling that money out of those accounts, little do they realize how much tax they're going to pay at that time. They will pay tax on the money that they put in because they got a deduction. So now when it comes out, the money they put in is taxable. They will pay tax on the growth of that money. The increase in income on their tax return, now that they're being taxed, that all that income is going to hit their tax return, it causes their Social Security income to be more taxable, potentially, depending on what else is going on their return. I've seen that happen before. When your income is below certain limits, Social Security benefits are not taxable. But as your income starts to go up, those benefits become more and more taxable. And if you're recognizing income for retirement accounts, it can make that Social Security more taxable and cause you to pay tax on top of tax on top of tax. So Social Security becomes taxable and it compounds the taxable income problem. They'll also be subject to required minimum distributions and be forced to take the money out, because maybe you might just be sitting there saying, well, that's okay, I'll just leave it in the retirement account and I just won't pull it out. Well, when it comes to these traditional accounts, traditional IRAs and 401ks, there are specific tax rules that say you can't just leave that money in there forever. We, the IRS, the government, we want our tax money on that. It's been sitting there for all these years. We want our tax money. We're going to require you to take out distributions at a certain time. And so you become required to take that out. And if you don't take that out, there's a huge penalty associated with that. Right now, it's 50% of whatever you should have taken out. And so you lose a bunch of money plus the taxes and everything on it. So it's not a great route to go. So you're required to take money out and you're taxed on that distribution when it comes out. And then if you just say, okay, well, I'll take out that minimum and try to keep the tax down. Well, if you die and you still have money in these IRA accounts or these 401ks, these traditional accounts, your heirs will be taxed on that. So all it does is just create a big tax snowball that just accumulates when you're retired. To me, that does not sound like really good tax planning. We could sit there and point and say, look, I just saved you $3,000 in tax, but I just, cost you $13,000 in tax, later on down the road. So that just took a small tax problem today and turned it into a much larger tax problem down the road. Something I have learned over the years of tax planning for clients is tax strategies are really financial planning strategies that come with a tax savings. If you are only getting tax strategies and not corresponding financial strategies to go with those, your finances can be a mess by the time you get to retirement. Your tax returns especially can be a mess by the time you get there. If you're just getting one-sided tax strategies and not being advised on the financial planning strategy, you can be creating a nightmare situation for your future. So work together with both your financial planner and your CPA, your tax preparer. Get them together, get them talking, get them figuring out what is really the best. Maybe paying a little bit more in tax today is better so that you avoid a huge tax nightmare down the road. And for more Tax Tutor tax tips, tap the subscribe button for tax updates. And also visit us at taxtutor.com to sign up for our weekly newsletter to keep on top of your taxes.